Hey everybody, Chris here with Tomorrow Mastery. Happy New Year! We've made it into 2021 finally. December's over, so it's time for the monthly checkup on our high yield dividend growth portfolio. We're going to take a look at how we're doing compared to the S&P 500, how much we got paid in dividends in December, and we'll take a look at how 2021 is shaping up for us. Don't forget to subscribe to the channel and squash that like button for the YouTube algorithm. Let's get started. Okay, so flipping over to M1 Finance here, we see that we closed out December 2020 with $24,557 in our portfolio. For the month, the return comes out to, on the screen, 2.5%. And for comparisons, we're going to flip over to Robinhood here on the S&P 500, ticker symbol VOO, and we see that in December, the return was, where are we? 1 month. Here we go. 2.2%. So we're still a little ahead. And as a reminder, we're not really trying to beat the S&P 500, but it is a good benchmark to put your portfolios against to, have a little reference point. The purpose, again, of this high yield dividend portfolio is to become a source of long-term income stream, not necessarily to beat the S&P. Okay, coming back over to M1 Finance, we will look at how much we made in the month of December. So we'll look at where are we going to? Activities, and we'll disable all that, and we'll look at our dividends. So as you can see, there is a slew of payments for the month of December, and it goes on to the next page, but I'll save some time and let you know that the total amount for December came out to $96.33. This was quite a big jump compared to November, which came out to $30.61. But in the last video, I did mention that we expected that December's payout was going to be higher due to just when the the quarterly payments turned out to be. The bulk of them are in December. So that is where we're at. That puts the yearly amount so far at 126.94, which isn't a crazy amount of number, but if you remember, we started this account just 2 months ago in beginning of November 2020. So I'm pretty happy with how it's panning out so far. What I do want to point out on the screen, you can see, is that we have a bunch of these BEP, Brookfield Renewable Partners dividends, and it looks kind of a little bit of a mess here, but there's a little bit of a reason for that. And the reason is because if we look at the position changes here, is that we see there was a stock split in the middle of December. So the stock split was a 2-to-3 stock split, which means that for every share of BEP you held, you would get half of a share. So every 2 shares you would have, now you would have 3, hence the term 2-to-3 stock split. Now, the reason for this stock split, BEP, they did pretty well in Q3, and they announced that they were going to split the stock. And some of the reasons for this is because they wanted to reduce the cost of the, per stock price so that it looks more attractive on a psychological level to the investors. But because, M1 Finance and what I'm doing with this pie is very much percentage based, so it didn't really matter too much to me. So just wanted to point that out. And whenever you have encountered such things on the stock splits and things like that, you do want to look at what the company's doing and why they did the stock splits. Okay. Up next, we are going to flip on over to a new website I have been using. It is called trackyourdividends.com. And so I've loaded my M1 Finance portfolio up here into it. And as you can see, it's got some nice nifty useful data here. As you can see, the dividend yield at the current moment is 4.56%. It's quite high. And the yield on cost, which means that counting out the appreciation and gains I've had so far on the portfolio, the current projected yield is 5.15% on the cost. And this is one of the reasons why you want to not just focus on the high yield itself, but also dividend paying companies which are increasing their dividends year to year, so that as your uh, the dividend sorry, as the price of the stock increases, the dividend yield might not necessarily increase, but because you went in at a at a lower cost basis, the yield percent on cost is now higher. That makes sense. Hopefully it does. If not, let me know. And also on this website, it's really nifty is that it tells you the projected annual income based on the shares and the underlyings that you are holding at the moment, and it tells you approximately how much your annual income is going to be projected. So as of right now, closing out, coming into 2021, the annual income of this M1 high yield dividend growth portfolio is 1,119, and I'll be tracking this number month to month as we continue to purchase more stocks. So coming back to the what we're doing with this portfolio, we started it at $20,000 at the beginning of November 2020, and on a weekly basis for the last 8 weeks, we've been putting $200 in every Monday and auto investing in the pie. And I thought that what we're going to do coming into 2021 is up that amount from $200 additional 5%. So we'll be putting $210 in every week. So this is one thing you kind of want to do with your investments. If you have, for example, a 401k, what you want to do is you want to put in as much money as you're able to, but you don't have to go crazy all at once. What you could do is kind of inch your way in. What you want to do first is, if your employer has a matching percent, you definitely want to match that, put in that percent so you get the maximum of your employer match, because it's literally free money. And what you could do is some 401k, they have the ability that you could have it automatically increase by 1% every year. I know my Fidelity account has this option, so you should check to see if you do have it. If not, since it's January, beginning of the year, you might want to go ahead and take the time to do that, so that you can quickly grow your retirement accounts and not really make a dent in the amount of money you have available. Okay, so what we're also doing with my comparison with the S&P 500 on Robinhood is, like, I know that because I'm investing week to week, there's a little bit of difference, and I want to be very scientific about this. So what I've been doing is I've been mirroring what I'm doing with the M1 Finance portfolio with the Robinhood account at a 1%. So basically, I started the M1 portfolio at $20,000, and I started the S&P 500 mirror at $200 at 1%. And every week, I've been putting 200 into M1 Finance, and I'm putting in $2 into Robinhood. So, what we're going to do, because we're going to increase by 5%, I will go here. We see recurring investments here at $2, and we are going to edit this investment to 210. So it'll match the $210 at 1% of that of the. There we go. Continue. Okay. Please fill out. All right. Oh, already told you. Oh. Ha. All right. I'll do this off camera because I don't want to show you my password. So, yeah. Coming back to the M1 Finance. Okay. Basically that wraps up the video here. So yeah, that is my New Year's resolution, is to add 5% to my automated investments. Let me know what your New Year's resolutions are in the comments below. Also, if you want some free money and you haven't started your investment journey yet, go ahead and click on the link below. Get 4 free stocks with Webull. It's right now they're doing a promotion. You could get up to $3,700 just by depositing $100. So it's a really good opportunity. It is a referral link. And also, if you want another free stock, there's also Robinhood is also giving away 1 free stock for signing up. And also, M1 Finance has a promotion also going on right now where you get $10 for, I think it's $100 for signing in. Anyways, as a reminder, I'm not a financial advisor. You should definitely do your own research before you invest in anything. And again, Happy New Year, and thanks for watching.